The Bank of England could be faced with a difficult challenge over the summer of 2021. U.S. investment bank Goldman Sachs has warned that the central bank may be forced to raise interest rates up to 5%. This is because Britain is dealing with the highest inflation rate among the G7 group of advanced economies in over 40 years. The cost of borrowing is expected to be increased this Thursday for the 12th time in succession, rising to 4.5%. High inflation has led to a rise in prices of food and drinks that hasn't been seen since 1977, and continues to create the cost of living crisis that the British public is currently facing. The government had previously committed to having the inflation rate this year. However, according to Goldman, it is unlikely to drop enough to meet the bank's 2% target. It has been estimated that the rate could rise up to 5% by August, creating further financial pressure on households and businesses as the cost of borrowing becomes more expensive. Central banks around the world have already increased their rates in order to tackle high inflation levels that have emerged due to the COVID pandemic. The head of the European Central Bank said inflation was too high, while the U.S. Federal Reserve was forced to raise their interest rates to 5 to 5.25% due to the worst banking crisis since 2008. British households and businesses are coming under increasing financial pressure due to the past rate raises, with 1.4 million households' fixed-rate mortgages expected to expire this year. Despite this, the UK economy has surprisingly held up well in recent months, with resilient level of consumer spending and increasing business confidence. Goldman went on to suggest that the Bank of England will upgrade their growth projections, and wage growth is likely to remain much more robust than expected, which could be incompatible with the 2% target. It is predicted that by the end of 2021 inflation will have dropped to 4.2%, which is significantly higher than the 2.9% the Office for Budget Responsibility expected in the spring budget. The coming months could see households and businesses feeling the strain of higher borrowing costs, and it's estimated that the Bank of England could be forced to raise the interest rate to 5% this summer.